Good day, everyone. This is Patrick from EasyFX Code Training System, and it is Saturday, the 17th of April, 2021. And this is the weekly technical analysis for spot gold and dollar yen for the third week of April. And as you can see, spot gold has been climbing up while dollar yen is retracing lower. Let's begin with spot gold here. And last couple of days of the week, it was a strong move up after breaking through the 1750 resistance zone. Now it's support right at the previous swing low as well. Close above the daily 55 EMA and the swing low of another swing low here, and continued to rally, trying to target the daily 200 EMA here, but stall at the weekly R2 level. It's weekly R2, 1778, and it closed just below that at 1776, almost 1777. Did hit a high of 1783.87, whereas the daily 200 is at 1793. All right, so it does look promising and a bit bullish move, and there should be some continuation move to try and target the 200 and perhaps even spike through to hit the 1800 level, which it has not since the end of February. So it's been over a month and a half now. So and it all started from this bounce off this trend line here, or this rising trend line, perhaps a double bottom. Let's also adjust this fib levels here now. I think we can move these fibs to the recent high up here and the low. So this has retraced back up into 38.2 fib here. So let's just adjust this over and see the retracement. Right, so right to the 38.2 at 1784, just below 1785, and that's what it almost hit, just below 1784. So let's mark this new fib levels here. All right, let's also zoom in on the bigger swing, the bigger fib, the green line. I think we can also adjust that to, because it dipped below this low. Let's move this to this swing low. All right, and it was just below the this swing low here, so it did not quite test this low, but it did pause at the 786 retracement, or rather the 21 fib. And now it's still some way to go back up to the 50 fib zone, or this 62 fib. So that's on the bigger fib. All right. So let me just mark this zone here. Okay, so let's also take a look at what drove this movement up, and it was actually dipping below on Tuesday, dipping below the 10 SMA, but then managed to find support right at the weekly S1 and then bounced strongly. That was on Tuesday, and that was because of the US CPI figure that came out better than expected. And it weakened the US dollar in the process, and after consolidation on Wednesday, it continued higher. And let's also take a look on the US dollar index. And this was the Tuesday news release on the US CPI. Initially moved up, but then sold off at resistance, sold off lower, and it fell below the daily 55 EMA now. And it needs to hold up and find support at this previous swing high. Otherwise, it could mean further weakness, and it needs to break out higher, back up above the daily 55 and this swing low. All right. So it was basically triggered from the US CPI news. And with US dollar weakening, so let's take a look at the US dollar against Japanese yen, and you can see that also retracing lower. That was the weekly time frame, so it has fallen, continued fall from the previous week as well. So it has already started to weaken earlier, and this was the Tuesday. After dipping below into 109 previous week, it did try to retest the previous support, and then now becomes a resistance. And on Tuesday, it initially climbed up, retest this 78.6 fib, and then was rejected and fell lower. So now it's at the at these swing low areas, and it needs to find support here. Otherwise, it could dip further into 108 territory, where the daily 55 is coming up, and the 62 fib between these two zones here, these two levels. So if it does recover, it needs to climb back up above the 109 and the monthly pivot, and back up into the resistance zone. So it's could be consolidation for a while before any breakout or breakdown. And the only news this week is just the flash manufacturing and services PMIs. So it's a critical level for the DXY as well as the US dollar against Japanese yen. And that will dictate the movement of the other majors, including spot gold as well. So for now, this could be an interim resistance zone. Let's change this into this color zone. All right, so it's at a critical level. It needs to break above the 109, otherwise it may consolidate and weaken further. All right, so do check out my other videos on the other major pairs and Ichimoku analysis as well. Have a safe week and a good trading week, and cheers for now.